Hey investors, it's the most wonderful time of the year for the stock market. You've probably heard about the Santa Claus Rally, but what is it exactly and should you try to profit from it? Welcome to another episode of Joe's Not Worried About It, where we turn investment anxiety into long-term opportunities. And today, I'm not worried, actually at all. I'm not worried at all about the Santa Claus Rally. I'm actually excited, but does that mean you should invest in it? Probably not. More on that later. What is the Santa Claus Rally? Well, it's a seasonal, potential short-term trading opportunity, not investing, important point, but trading opportunity. It's a seasonal pattern that dates back to the 1950s and was first described by Yale Hirsch in his book, The Stock Trader's Almanac in 1972. Yale noted a seasonal pattern that occurred with stunning regularity. So when does the Santa Claus Rally occur? Typically, it occurs for about 7 days, from the end of December to the beginning of January. And this year, it should occur, hopefully, from December 23rd through January 3rd. So, what can you expect from the Santa Claus Rally? Let's dive into those numbers. So analysts at both Bank of America and CFRA have put together data on this. And typically what we see on average is a gain in the S&P 500 of about 1.3% to about 1.6%. Now, it doesn't seem like a big number, but let's keep in mind, this is only over a 7-day period. 7 days where the average increase goes from 1.3 to 1.6. Let's call it the outliers too. Let's look, what is the best Santa Claus Rally that's ever occurred? Well, counterintuitively, it was actually in 2008 in the middle of the great financial crisis. The market rose 7.4% in under 7 days. But really, it was really only under 3 days or 3 trading sessions. Now, how did that happen and how did it play out? Well, on December 30th, 2008, the S&P 500 jumped about 2.4% on the news of government assistance for General Motors. And on the following day, shares raced even higher after a General Motors subsidiary received a substantial round of capital to help them out during that tough time. The sharp advance illustrated that even during periods of market turmoil, the Santa Claus Rally can really produce strong returns for short-term traders. What about the worst Santa Claus Rally? Well, that actually happened pretty recently. It was in 2022, and it occurred when the S&P 500 actually decreased by 0.9% over those same 7 days. But what's more interesting about that is it actually was the ender of a 7-year consecutive positive streak for the Santa Claus Rally. So it had been 7 years of this consistent returns during this time period, and in 2022, it didn't happen. It actually decreased by about a percent or 0.9%. Interesting about the years it decreases is that Yale Hirsch, again, Stock Trader's Almanac guy, he says it's really an indicator. It's a canary in the coal mine, or a Santa in a chimney, if you will, of the year to come. Generally, years that follow a negative Santa Claus Rally are also a down year for the market. All right, so let's dig in. Why does this even occur? We got 5 theories for you. 1, holiday optimism. The holiday season obviously fosters a general feeling of positivity and happiness, and there's evidence to suggest this overall happiness may influence investor sentiment, leading to more bullish behavior for traders in the market. All right, number 2 is tax considerations. Investors often engage in tax loss harvesting at the end of the year, where they sell underperforming assets to offset the gains to reduce tax liabilities from the year prior. This can create buying opportunities for new investors and can result in a more bullish market. All right, so the third is institutional investors. Institutional investors traditionally reduce their trading volume at the end of the year. Why? Well, they're taking vacations. They're with their families. They're not doing as much. And what that leads to is more opportunity for retail investors to run the market, and retail investors are usually a bit more optimistic. Positive corporate earnings. Company executives tend to be most optimistic heading into a new year. I mean, that makes sense. They have a new year, a new plan, and a new thing that they're going to achieve for their company, which generally relates to investors, retail investors, thinking more highly or having more confidence in company leadership because of this new plan. And this is especially true at year end because trading volumes are lower, so rallies that do occur can be amplified by a smaller number of people. All right, and the fifth, and what I think is probably the most likely, is a seasonal trend and also a self-fulfilling prophecy. Some traders will buy stocks just in anticipation of the Santa Claus rally. We actually used to do a yearly Santa Claus rally list of stocks at Markman Capital because of this trend. And the market reaffirms the bias because others will crowd into the stocks ahead of this as well. And it creates just a calendar-based market anomaly. So we do have a few caveats, but really only two. One, past performance is not a guarantee of future performance. That's the thing that you have to recognize when you go into any sort of short-term trading opportunity, especially when it's based on something like a market anomaly like this. And two is outside factors can contribute to this. So obviously in 2022, we had COVID. That was a huge negative for everything, everywhere, all at once. And because of that, it can influence the market. So you have to keep in mind when you go into something like this. The question I know you've been asking yourself, am I worried about it? I'm not worried about it at all. I know I say it at the beginning, but I also want to reiterate here, I'm not worried about it whatsoever, but I'm also not going to be participating. I'm not a trader. I'm a long-term investor. So these things are kind of just things that pop up and they're great, they're interesting. I love some good old-timey market lore. It's almost like when you hear about someone who trades with moon cycles. It's interesting. It's not something you're going to do, but it is something I'm going to look into. And the Santa Claus rally is not a long-term trading strategy, so I will not be participating. But it is fun, and if you are a trader and want to look for something like that, go for it. You have all the research now, the tools at your disposal, so go have fun with it, and let me know what you buy if you do it. Again, I'm not participating, so I can't recommend it, but I will say, hey, have some fun. Why not? It's the end of the year. And remember, the future belongs to those who invest in it today, and I want you to join me in investing in that future. You have a good one, and don't forget to like, subscribe, and follow us for more.